Welcome to Understanding Credit. This is very high level overview. I'm happy to answer any questions, but keep in mind that my expertise, I don't want to get too lost in the minutia of the specifics of somebody's credit and background, but I am available to answer questions or meet with you if you prefer to have a one-on-one. And thank you for being here and thank you for having me. So what is credit? So if you look up the definition of credit, you'll find that Wikipedia gives you a big long definition. And of course, the dictionary is going to give you a definition. But the common understanding is that when someone trusts you enough to lend you what you want now and allows you to pay for it later, usually with interest or some sort of string attached. So the key word on this slide, you'll see in all of the definitions, whether it's just a common understanding or something more formal that you'll find in the dictionary or what you might find on the internet, is that credit equals trust. Credit is about how much somebody can trust you, to make a decision as to whether you're a good risk to lend to or not. So why is credit needed and what is it used for? So it's not just to get a home loan or car loan or a credit card. So credit is used by a lot of different people who might be looking at your credit, and they're going to look at it for different reasons, not specifically just to see if you paid a bill back or if what your balances are on your credit cards. But employers may be looking at your credit to validate, do a background check, make sure that what your credit scores are, see if you're paying your bills. If you work in the financial industry, they might be checking your credit to make sure that you're trustworthy to be dealing with money, that you don't have issues with credit. It's important to note that in California, they can pull your credit, an employer can, but they can't use it in making a hiring decision. I don't know about other states because I've only ever worked in California, but that doesn't mean they won't pull it or use it as part of a background tool. Housing, if you're looking for a house, you're renting, they're going to look for things like, do you have credit? Can they judge that you'll make your payments on time based off of what they're seeing on there? They might not be the same experts that would be looking at your credit as there would be at a bank, but they're still going to be looking for the basic things like, does the information make sense? Is your last address where you said it was? Are you paying your bills if you have any bills? Do you have liens and judgments against you for overdue utilities that you didn't pay? So it's common to look for that type of stuff in housing. If you're going out and you're going to start renting your first apartment, or if you're looking to rent a home, you have to make sure that those things are tightened up on your credit as well. Obviously, you're going to need credit for any kind of loan making, whether it be a car loan or mortgage loan. So lenders are going to use your credit history and your credit score to determine if you are a good or bad risk for paying back the debt. Obviously, they're going to look at both things. Do you have credit and are you paying it back? And if so, what is your credit score? We'll jump forward into credit score in a little bit here, but understand that when you're talking about credit or you're thinking about your credit is, does somebody trust you enough to give you what you need now so that you don't have to wait for it? So if you have good credit, that's going to enable you to qualify for either larger loan amounts or better interest rates. Obviously, if you're taking out a loan, you want your interest rate to be as low as possible. So your credit information can be used to determine your trustworthiness to gauge your potential risk for making payments on time. So employers, landlords, and lenders obviously are going to use your credit report to validate information that you have provided to them. And some common items include address history. So if you wrote down on your rental application that you've lived at these addresses for the last 5 years or however long they've asked you to list them, and they're going to look at your credit report, they're going to do some matching up and go, well, this address wasn't on there. I wonder why they were only there for 2 months. So a landlord might think, well, did they rent that apartment and then they left and didn't pay their rent? It's going to leave some questions. So just like when you're filling out a loan application, when you're applying for credit and you're using credit, it's really important to make sure that the information that you're providing is accurate. So make sure you have a good address history and you know where you've lived and what the length of time you were at each place. That's all going to show up on your credit report. Make sure your date of birth is correct. You'd be surprised how often we see an incorrect date of birth. AKAs, you shouldn't be pulling credit or applying for credit under an AKA, especially when it comes to mortgage lending or auto loans. You might have some explaining to do if your name comes up as something completely different. So we'll see, this will be common. You'll see people who have really long names and they go by a shortened version of their name or a name that's not even close to any of the versions of their name. Like they might go by Tony, even though their name is Richard. So, and it does happen. So when you're pulling or when you're applying for credit, you want to make sure that you're applying for it in a way that you can validate that credit and that name and that social security number and that date of birth are you, and you can prove that it's you if you need to. If you don't do that, it doesn't mean that you're not going to get credit. It just means that you're going to probably have a little bit more work to do, and you're going to have to be providing some more information because they want to make sure that they're getting it right, especially with all of the identity theft and fraud that happens to people. And we see that on their credit reports quite a bit as well. So obviously trustworthiness is shown in a person's actions, not just their words. So make sure that you're not just putting the words down, that you are able to back up what you say on an application, whether it's for a loan or housing or anything that they would be looking at your credit report for. All right, so here is probably my favorite slide. This is where people start to get scared. Do you trust these brands? Probably. If you're buying things at these establishments, you probably have certain things that you buy there and certain things you buy other places. But I can guarantee you that most of us have had a bad experience at one of these places. I've gone to Starbucks for years, but I have actually gotten the wrong drink more than once. Now, what does that mean? Does it mean I don't trust those companies? No. It just means more often than not, they get it right. So your credit is going to be like that. Their credit or banks and lenders are going to be looking to see, are you getting it right most of the time? You can make a mistake, but how are you fixing the mistake? Is that mistake being made over and over again? Or are you self-correcting and getting yourself back on track? It's really easy to miss paying a bill, especially if you move. So lenders won't typically hold that against you if you're late, but you have to have a good reason for it. And again, it's going to go with being able to, the actions of being able to back up what you're saying. So if you say, well, I missed a payment because I moved, they're going to say, okay, well, where were you living and when did you move? And that should match up with any information that you've provided to whoever you're looking to extend credit to you. So here we go. What is a credit score? So your credit score is going to equal your risk. And it's a mathematical algorithm that is exactly the same applied to everybody who has any kind of credit. So you are what you are as far as your credit score goes. It's a 3-digit number that the major bureaus use. It goes anywhere from 300 to 850. So don't worry, you could be in the 400s or 500s. It doesn't mean you have bad credit. It could mean you just don't have any credit. Maybe you're an all cash buyer and you always pay cash for everything. So obviously you wouldn't have credit. So keep in mind your credit score is very important because it's how a lender is going to gauge risk, and they like it because it's like measuring something on a scale. Like, would you trust your butcher to just hand you something and say, this is 2 pounds? Or would you rather watch him put it on a scale and watch the little numbers change and know that it's 2 pounds? Because that scale is going to weigh everything the same every single time. So your credit score is like that. It's going to weigh a score the same every single time. And there's a lot of things you can do to fix it if you don't like your credit score. All right. So credit score ranges, again, they can go anywhere from 300 to 850. I've been in mortgage banking for, I don't know, almost 25 years now, I've never seen an 850 credit score, just so you know. So if anybody out there has one, congratulations to you. You probably have the same credit card that you got when you first got married or came right out of high school. So that's part of the game, is the length of time that you've had credit, how you've used that credit. And if you're changing credit or credit accounts often, it's going to be a lot harder to attain those higher credit scores. But this slide is going to give you a little bit of information to help you gauge, like, what's a good credit score, what's a bad credit score, and just some basic information. I won't read the whole thing to you because that would be very boring, and this is probably a boring topic for most of you anyway. but just know that there is a range. The different bureaus will value you at a different score, so you're not going to be the same for Experian as you would be for TransUnion. So our FICO scores are calculated based off of 5 key elements. Now, of course, there's this big, long mathematical algorithm. Who cares, unless you really want to know what it is, then you can go do some research and find it out, or find out what the Bureau's algorithms are. But for the most part, what you want to focus on is the item that is going to give you the most boost in your credit score, or that's going to knock you down the most. So obviously, based off of our picture here, that's going to be your payment history. That's accounting for 35% of the factor that goes into creating your FICO score. So if you have a good payment history, and you don't open up a lot of credit, and you don't close a lot of credit, and you do actually use your credit and you pay it back, you probably have a pretty decent credit score. So if you have a lot of debt, that can be a plus or minus. If you charge a lot, but you pay it off quickly, that's going to help you, because you've got that 30% for your amount of debt and your 35% for your payment history. Well, if you're charging a lot and you're paying off a lot, those two things combined can really boost your score. But if you're doing the opposite of that, charging a lot and not paying it back, that can actually really affect your credit score quickly. And then we have kind of these smaller things out to the side. You've got your length of credit history, which, like I said, that's typically you'll see people in the 800s. They have had the same mortgage for 10 years or longer. They've had the same credit card for 20 years, those types of accounts. So length of credit history does matter, but it's not quite as impactful as your payment history and the amount of debt that you have. So new credit, not good, it's not bad. We all need new credit at one time or another. You want to get the extra 10% off at the ladies fashion store, and if you open a credit card, you get the extra discount. But you don't want to make that a habit, and you certainly don't want to do that so much so that it can show on your credit card that that's what you do. You're constantly opening accounts and closing accounts. Those two things are going to actually hurt you quite a bit, more than 10% if you're doing it consistently. Your credit mix is also a factor, not a huge factor, but there's two different types of credit. You have installment and you have revolving. So revolving is going to be something that's open, like a credit card. Like you charge it, you pay it back, you charge, you pay it back, you charge, you pay back. Whereas an installment is going to be like a car loan or a home loan or even student loans. Something with a fixed payment and a fixed term is going to be considered installment. And creditors like to see that. They like to see that you have a little bit of a mix, that you're good for a 5 or 10 year payment, such as like a car payment or house payment, and that you're good for your regular monthly revolving credit card debt. They want to know that you can manage paying both types of credit. So that's what they mean there. When they say credit mix, they're talking about installment and revolving. How do you get credit? So in order to establish credit, you have to actually apply for it. Then you have to use it and you have to maintain it. So if you're not applying for credit, you probably don't have any credit. If you've never rented, if you've never had a car payment, if you've never had a credit card, you probably don't have any credit. The credit that you have is going to be a really low credit score, and it's not because you have bad credit, it's just because you have no credit. So what you want to do is you want to do some things to boost your ability to have a read on you to get that credit score. So if you're too young to have credit, like too young to have a credit card, too young to go out and start renting, you can do some things like you can utilize websites like payyourrent.com or renttrack.com. You can use Experian Boost, which is fairly new. We've actually seen quite a bit of that. The only thing with Experian Boost is it used to be that it only increased that one particular bureau, which is Experian. But it looks like they're starting to come around and they're spreading the love. It was a slight experiment that I think they have found is actually helping people with their credit, especially the younger millennial generations that don't have a lot of credit coming out of high school or college. There's also student loans. Student loans do count, even though your payments are deferred. What that student loan is doing is it's showing up on your credit report and it's saying, yes, you have this debt, but you don't owe anything yet, but it's establishing a history. So it's not a bad thing to have that, even if you're not making any payments on it yet. It is showing when you took it out, it's on there, you're getting a rating for it. If you happen to be making payments ahead of time on your student loans, that's great, but it's not necessary. But there are ways to get credit if you currently have no credit at all today. And so these are just some ideas for you and some places that you can go. You can do your own research as well, and you will find a ton of things out there. So getting your landlords or your utility bills through some of these websites that will actually start reporting to the bureaus is a really good way to start actually getting that credit that you need to go do some of the bigger things that are going to have more of an impact for you. So, all right. So one of the other things you can do, and this is something that's been around forever, is you can get what's called a secured credit card. So there's plenty out there to choose from. There's 3 here that are advertising no annual fee. They report to all 3 bureaus, which in my opinion is the most important thing. You want to make sure it's reporting to all of the bureaus. And you can qualify with limited or even bad credit. So these credit cards here, how this works is you put $250 cash on this card, and then you go and you use this credit card just like a regular credit card. The only difference is you put the money up for yourself. So some of them have a minimum limit, some of them are as low as $50. Most of them I think are around 200 that I looked at, 200, 250. So but when you start doing that, when you put $50 on a credit card, a secured credit card, and then you go and use that credit card, if it's one that reports to all 3 bureaus, it's reporting it as a revolving debt and it's helping you with that credit score boost. So moving on to what is bad credit. So actual bad credit is referred to as derogatory credit, and it's mostly due to a late payment, a skipped payment, if you have charge-offs or collections, if you've ever had a foreclosure or repossession or a bankruptcy, or if you have any liens or judgments against you. And definitely, most definitely, if you have any federal debt that you have defaulted on. And keep in mind, that's not just IRS taxes, that's IRS and student loans. So it's important to note that a lower credit score doesn't always mean bad credit. A low credit score can also indicate lack of credit. But for purposes of what is bad credit, this is bad credit. You've you've charged something and you didn't pay it back, you skipped the payment was late, you just didn't pay it at all, so they charged it off, or you've got a collection against you, that's all considered actual bad credit. And that will affect your credit score faster than anything. Okay, so this is just some general information. If you have had a slip up, remember the slide I said, I love this slide, it's my favorite slide. And it had Starbucks and McDonald's and Pepsi. So you can make a mistake. It's okay. It happens a lot. It's going to happen to somebody at some point in their life where life just hits you, and then it hits you again, and then it kicks you when you're down. So these things happen, and they actually have guidelines around lending that can help people get through those times. So this gives you an idea of how long some of these things stay on your credit for, and or a general rule of thumb of what when you might be able to qualify. So for example, if you have a late payment, and that's going to show for about 7 years, but you might be able to qualify for a mortgage in 12 to 24 months from the most recent late payment. So say my example that I was using earlier, you moved, you missed a bill, you never got it, it's showing up as a late payment. You know, you go to apply for a home loan, and they want you to explain a late on your credit report, and you're like, oh, late, oh, from when? You know, they're like, oh, it was from 18 months ago. And you're like, oh, I never got the bill, blah, 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 blah. You're going to write a letter of explanation, they're going to move on, and you're going to be fine. So we see this all the time, happens all the time. You have to provide explanations. Those explanations have to match the documentation in the file on your credit report. So you can't just lie and say, I moved, when we can't validate or have some sort of documented evidence that you actually did move from one place to another during the time that payment was late. So it all has to line up and make sense. But this is a good snapshot to let you know, like, how long you can expect to see something or have to address something that's on your credit report. And again, it's not going to stop you dead in your tracks in most cases, but it is going to require you to have to either provide additional documentation or some explanations. And those explanations definitely need to make sense. All right, so how can bad credit be fixed? So we've kind of been talking about this. So you can start with obtaining a free copy of your credit report from a reputable site. The only reputable site out there is listed right there, annualcreditreport.com. That should be the only place that you're looking for your free copy every year. Now, you're legally entitled to a copy of your credit report once a year. However, during COVID, there has been a lot more availability to see what is happening on your credit report. Now, I don't know if that's going to stay or if that's going to go away, but in the event that that goes away, you can always get a free copy of your credit report from annualcreditreport.com. You want to get that copy, you want to review your credit report, see what is actually reporting as a derogatory account. And just a reminder, derogatory is truly bad credit, and that is that bullet pointed list of late payments, skipped payments, foreclosures, repossessions, bankruptcies, those types of things. So you want to look through your credit report to see, what do you have? Do you have any of those things? And if you do, you want to contact the original creditor or their collection company to verify the amounts and the details about that account. This is the hardest part of credit repair, getting a hold of the people and getting accurate information. But here's the good news. So let's say you're going down this road, you're like, I'm going to fix all my credit, I'm going to figure out what's going on. You pull your credit report, you look and you write down your list of all the derogatory credit that's on there, and you start contacting all of those creditors. Well, if you can't get anywhere with them, or they can't confirm an amount, or they can't find you, then what you can do is you can report or dispute that information through the 3 major bureaus, which is Equifax, Experian, and TransUnion. So the law says that your creditor has 30 days to provide proof that that account belongs to you if you put it in dispute. I have done this myself through Credit Karma. I have pretty good credit, but I did find something on my credit report one day that I was like, oh, that's really weird and that's not right. I did it through the app and I was updated all the way through and my dispute worked. So it's not a guarantee, but it does give you probably the easiest thing to do first is to dispute it if the creditor can't find you, can't confirm the amount, or the collection agency is not responding to you. So fixing your derogatory credit. So creditors want to trust that even when you have derogatory credit, you will still try to make it right. So doing so will make you appear more trustworthy. And remember the beginning slides, we said credit equals trust. Like the word trust is in every single definition. So they want to know that you're trustworthy. So you got to accept the responsibility for any of the collections and charge-offs that you've incurred over the years and make a plan to pay them off. If you can use a good budget worksheet, and I do like Dave Ramsey's budget worksheet. I think he has some really great tools, and I like that he does the baby steps. He would hate this presentation though, because he doesn't think credit is something that's good, but unfortunately it is something that you have to have. You don't have to use credit, but you have to have credit. It's a tool in your toolbox, and Dave Ramsey does say don't use it at all, throw that tool away. But everything else that he talks about as far as like budgeting and things like that, I do 100% agree. I think his program is a great program, and I actually used it myself, even though I didn't think I needed it. I used it myself because a friend of mine was doing it, and she had paid off her house and was buying a second home, and I was like, wait a second, I must be doing something wrong here. You know, how are you doing this? So he does have a lot of really good tools. He does have a great budget worksheet. I think he used to have like a 1-page budget worksheet that was super simple to use. But you could even just handwrite stuff out. Again, you're just looking for not paying back something in one payment, but you're looking at what do I want to start with and how much can I afford to offer them? Because if you don't know what you can negotiate with, then your call isn't going to go anywhere, even if you know who the creditor is, even if you have their information. All right, so fixing derogatory credit, negotiate a collection or charge off with your account holders. You can usually settle for a lesser amount than what they are reporting. And you always want to ask for a pay for delete settlement. That is the key. It is one of the hardest things to get, but oh my gosh, if you can get a pay for delete, that's the best. So what that means is you've gone through your credit report. You're like, okay, these are all my derogatory accounts. Okay, I had this charge off for, $380 with Amazon or whatever. And you called them and you're like, look, I just want to pay it off. I went through a hard time. I lost my job. I got a divorce, whatever the issues were that caused you to not be able to pay the bill. Okay, you give them your story and you tell them, if I give you $300 today, will you do a pay for delete? Now, you owe $380 plus whatever interest they're tacking on, but you're asking for $300 today, but you want that pay for delete. And what that means is if they accept that, they show that it's paid zero and it's deleted and it's removed from your credit report. It's like it never happened. So some of the credit repair companies, that's what they will do, is they will try to negotiate pay for delete settlements. The problem is the longer that you drag something like that out, it's not beneficial to you to continue to have that stuff showing on your credit report. Sometimes it's just better to start with a payment plan if you can negotiate one with them. But most of the time you can negotiate for a lesser amount. You just have to be honest, and you have to know what you can afford to pay them, and you have to show them that you can pay it. So if you can't get anywhere with the collection or charge off holders, you can hire an attorney or a credit repair agency. So you really want to make sure that you're going with a company that's going to say, we will have this cleaned up for you in 3 months, or we will have this cleaned up for you in 6 months. And you have to hold them to that. You cannot continue to give them your money if they're not actually doing anything. Now, how do you know if they're doing something? Let's say you've tried all of this stuff. You're like, I just can't. I have two jobs and 3 kids or whatever, and I'm moving, and you're like, I can't do it. So you're going to hire a company. How do you know if they're doing what they say they're doing? You can monitor things. And this is where Credit Karma is going to be your best friend. So you can monitor your progress and learn the hacks to boosting your credit score using Credit Karma. NerdWallet also has a lot of really good stuff on it, but I do like Credit Karma, and I have used it myself, and I've used it to dispute accounts. I've used the hacks that they have provided me, even though I don't need the credit boost, just to see if I did it, would it actually really help? And it has. So I do believe that the way the app is today, that it is helpful, and it will help you learn some of the things to do. It's going to give you credit monitoring. So you're going to get to see 2 of the 3 bureaus. You'll always know what your credit score is. You can log on every single day. It'll tell you what your outstanding balances are. It'll tell you what derogatory credit you have. So if you're working and you're paying a company to clean up XYZ derogatory credit, you can go onto your Credit Karma app and you can see what the statuses are. You can see if there's movement that's happening there. And if there's no movement happening there, then what are they doing? You can ask them, well, nothing's happening with my credit score. I've been checking it for 60 days and it's getting worse. It's not getting better. Or it's stayed the same, and you can start working on doing your own negotiations, because you'll probably get farther faster if you're doing it yourself. You can also utilize the dispute function, like I said, through the Credit Karma app, which will provide you with regular updates. It did with me. It did take almost 30 days, but it did work. And I did get, I got the updates every day. But I use Credit Karma to check 2 bureaus, and I use my banking app to check the 3rd bureau. So I never actually have to pull a credit report. I can actually see what's reporting to all 3 bureaus between my banking app and Credit Karma. Credit Karma does only give you 2 of the 3, but most banking apps will give you 1 or 2 as well. All right, so here we are. We're wrapping it up. So here's what you're going to do. And remember, you got this. You're going to pay your bills on time. You're going to keep your account balances low, under 10%. Keep good credit open. Minimize new credit inquiries and new accounts. Know what's on your credit and own your past. Do what you can to make it right. And then, of course, monitor your credit. The big key is to monitor your credit. And if you're not using Credit Karma, then use your banking app. All the major ones, Wells, Citibank, Chase, and B of A all allow you to see your credit report through their app. So don't guess at your social security number, past addresses, employers, your date of birth. Don't guess at those things when you're applying for credit or looking to rent somewhere. Make sure that information is accurate and that the dates are accurate as well. So don't default on personal debt, because that can turn into a lien or a judgment, and that is considered derogatory credit. And although it might not affect your credit score, it can definitely affect somebody's willingness to lend you money. So don't ignore derogatory accounts. Don't file bankruptcy to get rid of federal debt like taxes or student loans. You can't default on federal debt. It will show up forever. And it's very hard to get around federal debt. If you go into default on federal debt and you apply for first-time home buyer FHA loan, chances are you're going to show up as part of the underwriting process as somebody who's defaulted on federal debt. And in order to get around that, there's a whole lot of work that has to be done. And sometimes you can't. Sometimes you're just flat out denied. So don't file bankruptcy to get rid of federal debt. You can't get rid of the IRS or student loans. You can file bankruptcy for other things, just don't file bankruptcy because of those things. Don't be credit deficient. again, you got to have some tools in your toolbox. It's good to have credit. It's just not good to abuse credit. So make sure that you have credit. Make sure if you're using your credit, you're using it wisely, but don't be credit deficient, because that will give you a lower credit score, which can mean a higher interest rate or less money when you need it. So don't let your past define who you are or who you're trying to be. And that's part of the, own your past and make it right. Everybody makes mistakes, but just because somebody screwed up your Starbucks drink once doesn't mean that you're going to never go to Starbucks again. It just means you probably won't go back to that particular shop for a while. So credit's the same way. They're not going to throw you out or just dismiss you completely, but they do want to see that you've made the effort to try and clean some things up and be more trustworthy. So, and that's the end of the presentation.